Maybe that's how they resonate with somebody, and then they start to build trust because they say, oh, you're human.
Yeah.
You're not just trying to tell me something or sell me something.
Yeah.
You're showing me who you are or who your business is.
Yeah.
Oh,
I also think with the
more.
entertainment side, there's the other part of it too. It's like almost a little bit self-deprecating. It's like when people lower they make themselves more human by like making fun of themselves.
Yeah.
You know, it's like if you pay me a compliment, the first thing I'm going to do is give a counter compliment to myself. It's like, it's just a thing. It's not like I don't actually have low self-esteem. It's just, I appreciate you saying a nice thing, but you know, that's maybe not close to reality. Really, it's more like this. And it's just to make sure that I don't ever I don't take things too seriously. Yeah. On the flip side, when people say negative things, I also don't take them too seriously as well. And I know what's real and what's not. You know, I look at myself in the mirror. So it's like, you know, I know someone's saying something and it doesn't matter what it is. They might make a smart ass comment because I got a big nose. I'm like, I already know that. Trust me. Nobody looks at it more than I do. But Hey, it's Julian. I'm the CEO and founder of LoanOptions.ai, and today I've got a very special guest with me.
Andrew Jackson, the managing director of Allies of Finance, a mortgage broking firm.
Mate, thank you so much. I really appreciate you coming in. Obviously, I want to start off by just digging into the background and your origin story, like what sort of led you to this path of, you know, creating your own business and, you know, how you ended up in mortgage broking.
Yes, I've always been in client-facing roles. Customer service, sales roles, a lot of software and tech. So that was in the UK, coming over to Australia 11 and a half years ago now.
Yeah, wow.
And I think that's formed how I like to work with people. We serviced professional service firms, so lawyers, accountants, some of the big banks, and they required a lot of hands-on help when it was software. But they also had seriously high expectations for the service because that's what they give to their clients. Like if you're a lawyer, you're charging your time out and you're working with some probably the biggest firms in the world. So you need to give high quality service. So that really influenced how I thought about work right from, you know, day dot of professional career. And then that's just gone through being the person working with the clients through to leading the teams. So the most recent team leading one was in the anti-money laundering space. And that allowed me to then really learn how to run a business on a larger scale. What's important as a leader, as a manager, as an individual contributor, because I still had elements of my role doing that. But there's always been that feeling in the back of my mind that I would like to do my own business. I'd like to help people exactly how I want to. And how I got into mortgage broking was because my wife, she works with Loan Market Group, the aggregator. She's done that for 7 years now. Very, very passionate about that firm. Previously, she was with Ray White. So she's been with the White family for 12 or 13 years now, wow. Which is awesome. And they look after her and she puts a huge amount of effort in. So I honestly think I've heard about mortgage broking over the dinner table for 7 or 8 years from a professional standpoint and also from having loans ourselves. And it was the right time to make the change from software, from being corporate to doing my own thing. I also think part of that was the inspiration that I got from her because she joined the company because she saw the need to work for a firm. It's family owned, yes, but they provide such a valuable service to people. Now, some people think, oh, it's just a home loan. But it's so much more than that, right? Because it's probably your biggest financial commitment until you take out your next loan, which will then be your biggest financial commitment. It's scary. People don't understand it. And I saw her helping through marketing, communications, and strategy and said, this is an area that I can get into. I can help people because I bring a technology background, but also I've worked with people, like
Yep.
people to people over the last 15
It's one of
years.
the more important factors, right? It's like,
So important.
it is a very, it's possibly one of the businesses where your people skills need to be the best. You know,
Yeah.
it's like somebody's trusting you with their sensitive financial information, their background, their credit history, that, you know, your people skills and your ability to build trust and rapport is possibly the most important
Oh,
part
100%.
of, you know, being a successful mortgage broker. And if you can't do that, like maybe you're really good with numbers, if your people skills are crap, no one wants to deal with you.
No.
You know, it's like at the end of the day, you know, you need all of it. You need the number skill. You need to be able to help people build a property portfolio if they're investors or if they're just trying to buy a home,
Yeah.
you know, that they're going to build memories for their family. Those are very different conversations and very different clients usually.
They're so different. And you're spot on. I had a conversation yesterday actually with one of my mentors, and he said, what did I think the most important skill in this industry was? And he comes from financial industry, but not mortgage broking. And I said, well, it's empathy. It's being able to immediately understand and relate to who you're talking to. They may not become a client of yours. Hopefully they do, and you can help them. But you have to build that trust, build that empathy immediately, understand what's important to them, their vision, their goals, their personal circumstances. So then you can help them on that individual basis. And whether it is, I just want to buy a unit for 500 grand, it's my first place, I've got to move out of mum and dad's place, I don't know where to start, through to the family upgraders or those professional investors where they know exactly what they want to do, but they still need the help in achieving it.
Yeah.
It's a different conversation. And if you can't relate to the person, you're just an order taker, and it works for some people, but probably not for everybody.
Yeah. No, that's right. And yeah, it's empathy is really, obviously really, really important. And one of the reasons is you almost need to put yourself in their shoes, because they will never tell you in exact words what they want or what they need. You know, sometimes the people, they can't really articulate exactly what the real problem is. So you almost have to connect the dots of what they're saying and almost like, you know, whether it's their body language or, you know, what their goals are, and connect them from where they are to where they want to be.
Yeah.
And, you know, whether it's like sometimes they might be too embarrassed to say it because they might think you're going to judge them for whether it's their goals or whatever. You need to be that emotional intelligence, you know, as a skill, possibly one of the most important skills you can have in not just mortgage broking, because there's a lot of industries that's really important, but it's one of those rare things or rare industries where you need to be really good at your product knowledge. You need to be really good at, you know, understanding, you know, the right property strategy for that client. But then you also need to be really good at sales or people skills or, and it's not sales in a traditional sense where, you know, you're selling a car as a product. You need to, you know, be able to present a solution. What you're selling is a solution to how you're going to get them from where they are now to where they want to be. And every client's different. Some people, if it's an investor, it's probably going to be a highly logical, rational decision. I'm not going to say always, because, you know, sometimes people, they're investing, but they're investing with their heart instead of their mind. Yeah. But, you know, that person's going to be more around, you know, what sort of return is this going to get, and what's the strategy around how do we get from this one to the next one after that.
Totally.
Those kinds of things, versus someone who's like, I just, you know, I want a front yard or the backyard so the kids can play, and so we can build, you know, we can have a dog, and, you know, there's a very different conversations, and you need to be able to adapt to that and listen to what they're saying and understand what they're saying. You know, they're saying they want to have a yard and all that kind of stuff, but what are they really saying? You know, it's not necessarily just about the yard. What they're doing is they're trying to present to you how they want their vision to come to life. You know, they want to build a family, they want to do all these things. So you have to extrapolate sometimes and go, they're telling me they want a yard. So if they're currently married but no kids, do they want?
Yeah, something's going to change.
Something's going to change.
Planning for, and that's it. You may have only met these people 5 minutes ago. It may be on a phone call or through, you know, Google Meet, and it takes a long time for certain people to feel comfortable to talk about anything, let alone these highly personal details. Because the only thing more personal than the finances is probably what goes on inside the house, which also comes into it in part of the conversation. I think that's why it's so important, to your point, to be able to understand the emotional side, but also focus on like the planning side. It's not just what's important right now. You have to address that. But like I have conversations with people where I'm saying, well, what have you come to me to achieve? What do you think you want to achieve? I want to buy my first house. Great. But what do the next steps look like? Have you thought about that? Because we can make the decision for right now, but we can also make the decision right now factoring in the future, because it may look slightly different.
Yeah.
Or they haven't thought about it, but you help them start to think about it and realize that, no, right now, all I want to do is this. I appreciate the conversation. Let's just get that one done. Fine. At least you've started that. You're now an educator and an advisor, and you're trusted by them as opposed to just an order taker. But in that conversation, it can easily shift, and then you go into problem-solving mode. You go, oh, I thought we were going over here. Oh, I've opened up a Pandora's box. Now we're going over here. And that's where your point, you can't just be one or the other.
Yeah.
But you have to know the products, you have to know the numbers, and you have to be able to very quickly pivot.
Yeah.
And say, we're not doing a unit, we're going to do a land and build package in a different state, and the requirements are completely different. Great. Okay, well, I can still put them at ease and help them with that one, but we weren't there 2 minutes ago.
No, that's right, yeah. Sometimes you need to let them know what's available, because they're also going to be limited by their knowledge and their upbringing. Like, it's like, whether it's a cultural thing or whatever, like we only buy places in these areas next to family and all these kinds of things. Yeah. But if it's an investment, well, that may not make sense, because maybe that area is really good if you want to live there and be close to family, but as an investment, maybe not strategically a good decision. And so you've got to be able to also help guide them and be like, what are they actually trying to achieve, and then how are we going to suggest some options, or tell them what some of our other clients have done when they're looking to do the same thing. It's like, maybe they don't even know this house and land package is a thing, or maybe they don't even know that, a sort of existing or freehold style investment might be better than an apartment, or whatever the situation is. They're only going to be limited by what they know. They're not the expert at the end of the day. They've probably done a little bit of research, and then you are the one that needs to take them from the basic knowledge, the peripheral knowledge that they have or think they know, and then connect them and actually get the execution part down. So, like, 100%. I want to ask you, what do you think that education part that I just touched on, like they've done a little bit of research, how do you think that brokers can sort of differentiate themselves? Is it through, I know you've got like a bit of an education sort of strategy with Allies of Finance, but what's the thought process behind getting people to have that trust, and as a mortgage broker, like, why would they come to you versus anyone else?
I think the first piece about the education is, it's great that people want to go and do the research. It can make them almost more dangerous to themselves, because they, depending on how long they've been on the journey, if they're the certain person, and this is not saying good or bad about them, but if they read something and they think, okay, I understand it, you may have to do more education, or just build trust to a deeper level, so then they change their mindset. If they come in and have done no research, great. Blank slate, you can then go in and educate them. And to me, education is all about, firstly, I have to know my stuff, but I can't tell them anything until I understand who they are, how they tick, to everything we've just talked about. So I need to know the kind of character they are, how they listen, how they learn. Now, would it help them if I'm just educating them to a basic level, drawing the house and showing the percentage of, well, this is what you're going to borrow and this is what you have to contribute? Okay, great. Maybe they're visual and they get that and say, I now understand LVR. Fantastic. So where are they starting off from? And how quickly can I build trust? So what I'm talking to them about does educate them. Because if they don't trust me, it doesn't matter the level of my knowledge or the quality of the content. They're not going to absorb it.
Yeah.
And that can take time with some people. That's fine. Because I don't want to bring a client on board, I've got your loan. If I see you in 2 years, fantastic. I'm looking for clients where I can work with them to add long-term value over 5, 10, 20, 30 years. If you're a first home buyer and you're 25, the education I'm going to give you, and you're going to give me in part because you're living in your place, you're continually changing what you want. It's going to evolve, but that's a long-term relationship. So I want to take time to establish the trust, and it can be done quickly, but it takes effort, and then build on that going forwards. And I think that's why it's so important, brokers or any industry, we continually learn.
Yeah.
So we can evolve the education we give to people and how we give it. I know, you've got a wide array now of digital product offerings. It didn't start there, but you've expanded.
Yeah.
How I give and how you give education can also expand, whether that's through something you write a book, or you do a podcast, or you just refine how you educate people on a discovery call. Maybe that's it.
Yeah, and I know some brokers that have just added me into a WhatsApp chat that they add. It's almost like a broadcast channel more than it's a chat, where he's just sharing, property insights, which suburbs are doing well, blah, blah, blah. And look, everyone has a different strategy. And that's the thing. Like, it could be as easy as something, share it to a WhatsApp group. All your clients are in there unless they opt out, and then that way, like anything that you come across that you find useful as a broker, some of your clients might find useful as well. And others, it's through a newsletter. Email arguably has less efficacy than maybe SMS or a WhatsApp chat, but there's no right or wrong way. Some people do really good videos and, great. They do well on TikTok through educational videos, or they do, Instagram or, LinkedIn. Some people, like we obviously have had great success with LinkedIn. Some of them write blog articles. Like, there's no right or wrong way. It's like whatever you can feel connects best with your audience. And, younger borrowers might like the other channels versus someone else might like a hand-delivered, older generation might like a hand-delivered letter, once a month. Here's my sort of my update and here's what's going on. Is this, everybody has a different sort of preferred medium, but what doesn't change is adding value to your client.
Totally.
That's the part that I think if you look at anybody that's been successful, they're adding value in some way. And that some people, it might be just purely entertainment content, silly memes and TikToks and whatever else. For others, that's still, the client might see that as adding value. And maybe it's not what we expect, or, have come to.
Maybe that's how they resonate with somebody, and then they start to build trust because they say, oh, you're human.
Yeah.
You're not just trying to tell me something or sell me something.
Yeah.
You're showing me who you are or who your business is.
Yeah.
Oh,
I also think with the
more.
entertainment side, there's the other part of it too. It's like almost a little bit self-deprecating. It's like when people lower they make themselves more human by like making fun of themselves.
Yeah.
It's like, if you pay me a compliment, the first thing I'm going to do is give a counter compliment to myself. It's like, it's just a thing. It's not like I don't actually have low self-esteem. It's just, I appreciate you saying a nice thing, but that's maybe not close to reality. Really, it's more like this. And it's not, it's just to make sure that I don't ever I don't take things too seriously. Yeah. On the flip side, when people say negative things, I also don't take them too seriously as well. And I know what's real and what's not. I look at myself in the mirror. So it's like, I know someone's saying something and it doesn't matter what it is. They might make a smart ass comment because I got a big nose. I'm like, I already know that. Trust me. Nobody looks at it more than I do. But it's a good way it's a good practice to, I guess, not take yourself too seriously when people say good things, and not let it get to your head. And just to remain as humble as you can be.
Totally.
Equally, that same skill set that you learn and build up over time at dealing with people that are saying nice things, that same skill set is used to sort of not take the maybe the negative comment. Not that there's many, but there's always going to be one or two people. You can't please everybody. Some people might make comments about whatever it might be. It's like your branding, or like some people might comment and go, I see you everywhere on LinkedIn, but they're not saying it as in it's a good thing. They're almost like a little bit annoyed by it, and it's like, block me or remove me as a. I don't care, whatever you want to do.
It's a good point, and I always try to remember that if somebody has said something to me that appears quite, whether it's insulting, like, I wonder what's going on there, because especially if I don't know them, it's not my thing.
Yeah,
It's their thing.
exactly.
And has it come from a place where maybe they need help, or has it come from a place where they're just having a shit day and I was the person they vented at?
Yeah.
That's cool.
Often people don't like, I know like Alex Hormozy speaks about this story, and the story is like when he was trying to make it, you know, he'd have like this little gym, and it was tiny, and, you know, he basically slept on the floor in the corner of it, and that was like his house and his office kind of thing.
Yeah.
He was a personal trainer. And everyone was like, man, you know, cheering him on, keep hustling, you're going to make it, you're going to make it. And then when he had this big gym and like multiple staff and everything, people started saying to him, you know, oh, look at you, like, you know, all Hollywood on us now, like almost like implying that now that you're successful, you know, like they're almost a little bit. He's
Well,
like,
it's tall poppy syndrome, isn't it?
It is. And it's also like when people see you getting some success, I'm not talking about myself, just you or anybody else.
Yeah.
Sometimes it's a brutal reality check for themselves, because they're like, they know they could be doing more.
Yeah.
You know, they know that could have been them, or maybe they're, you know, it's more a reflection, to your point about, it's a reflection on them and what's going on in their lives rather than you. But unfortunately, it's just like that tall poppy thing. You know, it's like they want to look for a way to like maybe try and bring you back down to their level instead of trying to level up themselves.
Yeah.
So it's just, it is one of those things where you're just like, it's disappointing that it's the way it is, but you just kind of deal with it. It's just people. And
You do. I actually read a good quote. I think it was the last couple of days, which resonated with me then, but links really closely into that. And it was, comparison is like the enemy of joy.
Yeah.
Something like that. I was like, and I thought about it, and I was like, oh, I completely see that, because I'm in a position right now, launching Allies of Finance, going where I could very easily compare myself to other people. And that, if I do it too frequently or with too much emphasis, will be bad. I do need to look at how others do things, take lessons from it, both positively and, oh, I wouldn't do that, set goals, all of these things, you know, very relevant to the clients I work with. But I don't want to compare myself too strongly, because I'm creating something that's different to what you've created, what anyone else is creating, because I'm going about doing it the way I want to do it. I think that's a good mindset to take in when you're helping your clients, when I'm helping my clients. So just because your mate bought a place doesn't mean you have to compare what you're doing to what he's doing, because you don't know his personal circumstances to the level that the broker he's working with probably does, because you haven't seen inside his bank accounts. You don't know the debts he's carrying. You don't know what his plans are that he's really put on the table. You know the barbecue or the pub chat. So don't worry about that. Let's set your goals. Let's work out what's important to you. And whether that is that first home, whether it's a serial investor, whether it's you're living overseas and you want to just, you know, have somewhere to come back to in 15 years, whatever it is, let's do that. Let's not just compare people, but use them as like some guiding points. Like, oh, you know, really, doing that, maybe I should try.
You should compare yourself only to yourself or a previous version of yourself.
Yeah.
And so, you know, when you do that, you're setting your own benchmark, and, you know, small gains will be visible, and large gains when you look back, or even small gains that compounding over time.
Yeah.
When you look back and you've you know, agreed and committed to make X amount of calls per day, handle certain tasks like this in your business, you know, when you do it once a day, and this is what I'd say to all of our brokers, like, you know, they know what they need to do. They know how many times they should be dialing every customer that comes in. They know the process and the blueprint. We've set it out, and it's not a blueprint that I just made up. It's a blueprint that made me, you know, mildly successful as a broker. And so we give them the blueprint. We tell them this is what works, and this is what will continue to work for you. And then it's just comparing themselves only to themselves. You know, we do have leaderboards internally and things like that, and that's just to create friendly competition.
100%. They're salespeople, right?
Correct.
You need a bit of that.
Yeah, but at the end of the day, we're in the business of just making everyone a slightly better version of themselves, and continuously compounding those gains. If you talk about these habits, it's like the book, Atomic Habits. It talks about, even just doing the small thing the smallest thing in repetition is going to lead you to massive gains, and building these strong, strong disciplines around, how you execute your day to day, and you ultimately live a better life because, when you feel like you're accomplishing even these small tasks, you're getting the satisfaction of like, yes, I am moving forward. And it doesn't matter if you're not taking giant leaps forward. As long as you're putting one foot in front of the other, you're going to get that satisfaction, that fulfillment, that purpose that everyone really just needs. It doesn't matter whether you're a broker or any other. You just want to feel like you're moving forward. Even if it's frustrating at times, it's not fast enough. If you're moving forward, you're still in the right direction. You're still moving towards the goals. And that's why I think when people do goal setting, sometimes they set a goal so high that it almost seems unachievable. Therefore, they give up when they haven't made the required momentum. It's much more important if you're going to set a big goal, and I don't even like pronouncing it, but big hairy, audacious goals. I think like it's really important that you set out a plan to reach that. It's like, okay, I want to do X amount. You might have a number in your head. Okay, I'll buy this day. I want to be settling, whatever it is, 10 million, 15 million, whatever, in a month. What's the plan to get there?
Yeah.
Okay, so how many calls do I need to make? How many appointments do I need to take? How many, sets of supporting documents do I need to collect in order to get, maybe there's a ramping period, so you need to work that out. Okay, well, if I need to be at 10 million by 6 months or whatever, then I need to start building my pipeline today. So that means I need to be doing what marketing activities do I need to be doing? What networking opportunities do I need to be present? How many accountants should I speak to try and drum up some referrals? So a goal without a plan is just a dream, really. But I think the best thing that brokers and anyone who's trying to follow or build a business should do is like set out a plan and make it ambitious. Don't set the bar too low. But be careful not to set it too high either. So pick something that is a stretch, but is achievable and is realistic, and then map out if you were to draw a graph, and say, here's where I want to be, and here's the top end of this axis, and here's where I am now. Yeah. So what's the line look like from where you are now to where and what steps you need to put in place? And it's just very simple stuff, but a lot of people make that mistake. They set a goal, I want to do this, or I want to, win this award, or I want to do that. And it's like, okay, what are you doing differently?
How are you going to get there? Yeah. Like, show me. And that's it with, you need that strategy, the planning. You also need the discipline to not only stick to it, but have reality checks with yourself and go, why is it not working? Or why is it working? Should I double down on something, or should I stop? Yeah. So like launching something, I've had to look at it and say, well, what proves that it is working and what shows that it's failing? And have to be really very cold and honest and write it down so it's not hidden in my mind, and then have a checkpoint maybe halfway to where that mark is and say, are we on track? Do you need to change things? You look at Team Sky with their marginal gains. They're always looking for little wins that move them in the right direction. As you're saying, you just want to be moving forwards. But you have to have the discipline to do the checking in, to have the strategy. You can't jump into the mortgage game as a client and say, well, I want to buy that. Okay, well, you don't earn enough yet. What's the plan to get there? Or should we do something different? If that's really important to you, let's work out a plan over the next, could be 6 months, could be 5 years. How are we going to get there? How are you going to hold yourself to account? Do you need to change things in your lifestyle? Do you need to, if you've got your own business, do you need to change the way you run your business? Do you need to do more dials to get more clients through, to generate more revenue? What is that plan? Because you could go in blindly, but it's probably not going to work out for the best, or you're going to end up somewhere completely different.
Yeah. I know, looking at your background, doing a bit of research prior to this episode, I noticed you did some work in KYC AML. And I want to talk about this because like we're seeing just such an increase in, you know, ID takeovers. You know, we obviously had all these cybersecurity like major breaches in our country here, and it's happening everywhere really. But you know, large scale databases of people's ID and sensitive information like released to the dark web, and then you've got all these people paying money to try and take out loans and things like that. And you know, we do, I would say, a better job than most at preventing. You know, we've got a number of technology tools and stuff like that that help us, but also just good training. You know, the things to sort of help identify the red flags, if you will. Yeah. But I know there's a lot of stuff being done in the sort of ID, you know, whether it's biometrics or, you know, non-intrusive checks, whether it's to, you know, to check the validity of an ID or see if they have any, you know, sanctions or adverse media. Like there's all these different things. Like, you know, you might, for all you know, you might get an application for, you know, Pablo Escobar. And I'm just being a smart ass, but, you know, if you don't run the Google check and see, you know, is there any adverse media? You know, we actually said no to a client because there was he was unsavory for a number of reasons, but one of them was there was some kind of, he was like a sex offender, you know. And
right, okay.
We don't want to deal with these people. We've got zero interest. You know, it would have been worse if he was trying to buy a white van with no windows, but, you know, that wasn't the case. It's just like we have to, any client we recommend to a lender, we're putting our accreditation and our reputation on the line, you know, and it's like, who are the people we want to deal with? Now, there are some times where people come to us and we can genuinely tell they're rehabilitated. They might have, you know, done a very minor offense in their young years and they did their time and now they've got their own business, they've got a family, you know, stable, they've really turned their life around. You can't, you know, I mean, you've got to use your own judgment.
100%.
Right? It's like some things we're just not interested in, you know, it's like if they're into, you know, sort of an underworld, you know, crime syndicate, like, or affiliated with that, like we just can't go there, you know, we're putting ourselves at risk. And, you know, it's not our money that's being lent, it's the lender's money. We've got to protect their investment and protect our accreditations. But, you know, if we see this as a small thing, you know, they've really turned their life around. You can tell speaking to them that, you know, this is a long time ago, it was a different version of themselves. And you kind of go, okay, well, you know, I think this person deserves a second chance. And you make that judgment. But there's a lot of things that, you know, people don't know that lenders can check. And it's not just Google checks. And some lenders are going so far as to like check people's social media out and things like that. You know, and we've had applications where, you know, they haven't liked, you know, someone they took a photo with or something and they've declined the application and we didn't even see it or know about it. So it's like they're doing checks as well as the stuff that we're doing. But I like what's being done around biometrics. I don't know how long that's going to be sustainable for because like generative AI is now moved into video and like it's scary what, you know.
It is. There's a lot of, I think the whole industry is shifting and has to shift to adapt to the AI tech. I'd say on the AML KYC piece, I worked in that space for just under 2 years and it was an incredible 2 years. It really was. I loved everything about it. I worked for a New Zealand firm who's expanding to Australia and is now in the UK. And I didn't know much about AML beforehand. I knew what it was, but I had like the average person on the streets knowledge of it, which I realized is really, really low.
Very low, yeah.
And 95% of the time it doesn't need to be any higher, but it pays to have a better understanding of it, in my opinion. One thing that working in the firm taught me was the real value in having your own values. So to your point, we can't work with that person because we suspect them of something and there's good evidence to show that they are an unsavory character. Brand can't be associated with that. Plus your own values don't want you to be associated with that. I think that's really important now as a broker. Say, I'm referring them to a lender. It's the lender's money on the line, but it's my reputation, my accreditation, my license potentially on the line. So the first thing that actually goes past all of the technology we have to do is you've got to be able to identify the person you're talking to face to face. Like, I won't lodge an application unless I've met them face to face or we've had a proper conversation through a Google Meet or something. So I go, I know you. Okay, I've validated your IDs. I can only do so much. The lender, unless they tell me, the AML KYC responsibility sits on them, or the technology that we're using to lodge it through. Where the risk comes in is, does the AI technology get ahead of the biometrics?
Yeah.
So when I was in the industry, it was only 2 years ago, less than 2 years ago, the AI technology wasn't as prevalent as it is now. So it's rapidly evolving.
And it's so much more accessible.
It is.
Yeah,
It's so easy to get there. The way I look at it, I've always used the references, it's like doping in sport. It's almost, you almost only hear about doping in sport when they catch up to where the dopers are, but inevitably they're probably moving on.
Yeah.
So it's how can we get ahead of things, or at least put as much effort as possible to minimize the impact? Because you can't say, well, we can't fix it. If you look at the AML space, in Australia, only financial institutions are regulated. So it's great. We're referring people to lenders. They're regulated. It's good. But real estate, legal, accounting aren't regulated yet. So it opens up the industry that we are in part servicing, the property one, to money laundering. Okay? It's all interconnected. So everyone has to work together to try and solve the problem. Technology will be the biggest, or one of the biggest solvers of that, certainly on the high volume pieces, where you have somebody applying for a $500,000, $1 million loan. They're not typically seen as high value targets, but have they done 10 of these in the last year? Okay, well, there's something to check out. And we can do what we can do. The lenders, they have their checks in place. As you say, sometimes they go an extra level deep. There are firms out there that can really help you unpack the stuff that you don't understand, the trusts within companies. Is it overseas money? Where is the ultimate source of funds, source of wealth coming from?
Yeah.
That stuff is fascinating because it can really go down layers. But for me, I'll help in any way possible because having spent that time in the industry, I bring that care to what I do now, but also the value for me is still there. Like, some of the stuff that goes on is horrific, and anything we can do to help, I'm all for.
Yeah.
Right.
It's great. Look, it is a skill, and even just complex business structures. I know I see a lot of brokers really struggle with that. We spend a lot of time training our staff on that, so we don't have any issues internally. But beneficial owner reports from services like Equifax or whatever. I mean, they tell a really good story, and they really should form part of your submission, so you can help the lender understand. I mean, some of the lenders are running them, some of them aren't. They're just getting the data instead of the proper tree that is mapped out. Here's where here's which company, the parent company, here's all the other entities part of the group, and sometimes they might say no to a deal because they can't get comfortable with the structure, but then you present them the tree and explain it, and then they go, actually, you know what, we can get comfortable if we get a cross guarantee from this entity as well. And then all of a sudden it's a deal. So that part, there's different ways you could look at it. One is risk prevention, from your business and also from the lender's side as well, protecting your accreditation with them and your reputation. But then there's also the other side. If you have really in-depth knowledge, it can help teach you how to structure a deal properly and get more deals across the line. So it can improve your chances. It's not just the risk management side. It's also, there's a commercial side to it as well.
100%.
You have KYC and then KYB. And, if it's a different type of trust structure or something, and you're sort of not presenting the right entities or you don't understand different types of trustees there can be, and then presenting the deal wrong means you're going to end up with a decline. So there's a few different aspects to it, but I think more so it's getting scary. We're using more sophisticated tools in our business, like ones that can look at the email address of the client and work out if it's a burner and what other accounts have they used online with that email address. Like, you know, do they have a Disney Plus account registered with that email address? Do they have a Netflix account registered with that email address? So really cool tools that are unintrusive that help us paint a better story of a customer. Or if we have any suspicion, you know, this can either exacerbate those suspicions, or it can sort of give us comfort that no, this is, you know, we've got, Discord account and, you know, Disney Plus and whatever. You know, I'm always careful about how much I share, because it's like using the doping example as well. The more we share with what checks we're running and how we're able to, the more they're able to work around these things. And so we have a number of advanced tools. I'll just say that. And, you know, I guess the more and more sophistication we get with detecting whether it's similar IP addresses that have been flagged or, you know, potentially, then the more comfort we can get with lenders saying yes, because ultimately when we lower their risk, when we lower the amount of fraud they actually get, the more comfortable they can feel saying yes to deals that are borderline.
Yeah.
You know, at the moment they may say yes, they may say no because, you know, they've historically gotten burnt on borderline deals. So they take a stance where if it's, you know, not a 100% all in the clear, they'll say no. And as a broker, our job is to reduce the amount of fraud as much as we possibly can, so that the lenders can have a broader credit appetite and say yes to more deals. Ultimately, that's what we're looking for. But they need our help with it. So it's not just, the lender does this ID policy, I only have to follow that. It's always baffled me. We always ask for more than what the lender asks for. And the reason for that is, you know, ultimately we can say we did more than what they require of us, not just what they require of us. It's a very silly approach to take if you're just doing the bare minimum. There's no way that if something goes wrong and you've just done the bare minimum, that they're going to see that and go, well, they're actually trying, they have our best interests. This brokerage has our best interests at heart.
Totally.
You need to show them you went above and beyond.
You really do. You've got to, I mean, they're essentially your partner in this. So you have to work with them on it. And we do the same thing. It's gathering more. So we'll ask clients, like, okay, let's have your bank statements. Not every lender requires you to send us to submit the bank statements, but this allows us to have a proper conversation with you. So, because it's not just how much can you borrow, it's what are you also willing to outlay as a monthly repayment. And your bank statements allow us to have that conversation with you. It also allows us to have the conversation, well, what's upcoming in, you know, your future plans. Because the last thing we ever want to do is say, great, you can borrow something that costs you $4,000 a month, and you don't tell us, or we don't dig into to see, do you really want to spend $4,000 a month? Possibly not. Maybe you've set your limit. I don't want repayments over $3,500 a month. Okay, well, let's have that conversation. Let's have the evidence beforehand. And that's for the simple ones. For the more complex, whether it's self-employed or even if it's just for people, maybe overseas finance, whatever it might be, it's the more information we have and the better the picture we can paint for the lender and say, you'll probably find something, a red flag here. This is the justification for it, or this is the reason for it. So they don't have to interpret something and then maybe take a negative, stance, like it's black or white. Okay, no.
Well, here's the stance, and this has been told to me by many credit analysts from many banks and lenders. They said, if we know your customer better than you do, we're going to decline the deal. And there's some validity to that response. It's like they're just getting a submission. They're not actually talking to the client.
No.
So if they know more about the client than you do, there's a problem. That means you haven't done your DD properly. And you haven't asked some obvious questions, you know, that if you look at it objectively, you should see that there's a problem there, or a bit of a shortcoming over here that is unmitigated. So I think that's a good way for brokers to start, is like, under no circumstances should the lender ever know more about the customer than I do. And, you know, that way, if the lender asks a question, I don't need to go, let me just check and I'll call back. Like if you have the answer right then and there, that's way more powerful to a credit analyst than if you say, let me come back to you, and you take a couple of days. And
100%.
You know.
And let's not forget that this is also creating if you have the information, you've done it up front, a far superior experience for your client.
Oh, absolutely.
Right? If we ask for more documents up front, great, because we won't have to ask for it in the future. If we dig into the information to know everything we need to know about you and question some things that we're just not sure about, great, because we'll submit it and maybe the lender has a couple of back and forth questions with us, but we can answer them. We don't have to come to you.
Yeah, we don't have to
put it back in the queue.
Yeah.
You're annoyed because you're at work. This is another 24 hours. It's time constrained. No. So all you know is you built trust in us. We've said this is what we're going to do. And all of a sudden you get the call saying, oh, you're pre-approved or you're unconditionally approved. Fantastic. Yeah. That's all they want.
Absolutely.
They don't want like the stuff in the middle because that's what they're coming to you for, right?
Yeah. And if you can make it easy for them, that's more than likely to make them sticky. You know, you can't just, I mean, you can't just assume that you're going to give them this clunky process that's half baked because you're trying to make their job easier and you're trying to ask for the least amount of documents possible and that they're going to be happy with that experience. You know, it's always good to set expectations, but then, you know, under promise and over deliver.
Yeah.
You know, say, hey, I'm going to ask for these things and here's why I'm going to ask for them. It's depending on which lender we need to go to. This lender needs it, this lender doesn't. If I have it, at least once I calculate what the best option is for you and make a recommendation, I can just press the submit button when you give me the go ahead. And that's how you create, you know, sticky clients. Like, wow, Andrew made it so easy for me to just like, it's just, that whole process needs to be smooth. And it doesn't mean, smooth doesn't mean not asking for information. It's like, set the expectation up front that like, here's usually what we ask for. There is a chance that the lender might come back. If you've got it, great, send it to me up front so then I don't need to bother you.
Totally.
If it's a real big runaround for you and you need to go to your accountant, just give me your accountant's details. I'll contact the accountant. They'll probably confirm that it's okay to share the data, but we'll make it easy for you. You know, if you connect your bank statement through this Ilion portal, you know, then we've got all the income and all the expenses itemized. If I need to ask you a question, I can probably check if it's in there, the answer's in there, and I don't need to come back to you every second day. And then, you know, it also matters which lender, because sometimes the client says, oh, you know, I want the cheapest rate or want whatever, but sometimes the lenders with the cheapest rates are the cheapest rates because they have shit service. Yeah. And I'm just saying that totally honestly, because it's not always the case. You know, sometimes the lenders with the lowest rates have the lowest cost to serve. Therefore, there's more tech and automation as well. So I'm not going to just blanket statement that. But generally speaking, the ones that they have nothing else to offer other than a low rate. Yeah. And, you know, their turnaround times are blown out. And, you know, in asset finance, it's very different because a slow turnaround in asset finance is a number of days, whereas in mortgages, it's weeks, you know, maybe even a month. Yeah. And
well, that's it. They use the rate as that bargaining tool. It's like there are some large lenders out there who will offer incredible rates, but you will be waiting for multiple weeks, and that's just default. I know because my brother in the UK has a loan with a certain lender, and he said, yeah, it took ages. Like, it shouldn't, but it's because you went there because they offered you something really sharp. Yeah. And by the way, you didn't talk to a broker, so let me set you straight on that one.
Yeah. Because, you know, there are some lenders that offer the great rate and then offer incredible service, and sometimes it's maybe a fraction more expensive, but the overall experience is way better. Your ability to borrow money in the future with that lender and have that relationship and connectivity may be worthwhile, maybe more thinking of it like an investment in a relationship with a lender that's going to support you in your plans for the next number of years and not have to refinance it, you know, because some of those big lenders you're talking about, you know, usually they come with a loyalty tax as well. And so you almost have to keep refinancing it because you're never going to be on the best deal. Whereas other lenders look after their existing clients and you don't really notice the loyalty tax thing. It's just like every one of our clients is on the best that we can offer. And, you know, that's how it's always going to be. And, or, you know, some degree of that. Yeah. But yeah, it's like if you've got a lender that only has one lever to pull because their service is crap, you know, overall their product, you know, features and benefits is not compatible. Their documentation and settlement process is clunky. They've only got one lever to pull, and that one lever is pricing. And so some people are willing to wait a month. And if you are, no problem. You know, I have no problem recommending
Yeah. If you know up front that's what it's going to be, then
If that's all you
fine.
care about
Yeah.
and you're not in a rush, no problem. Like we make recommendations to lenders that are going to take forever when that's the only thing the client cares about. And, you know, we've explained the value that other lenders provide. If they don't see the value in it, we're not going to force them. At the end of the day, we're there to represent their interests.
Yeah.
So if that's what they want, we'll give it to them. Ultimately, more often than not, there is some time sensitivity,
Yeah.
or there is some element of like, okay, I like a good price, but equally I don't want to be stuffed around. So because people realize that their time is worth money, and often, you know, when they're making a purchase this big and it's stressful enough, they don't need more stress, you know.
no, they really
So
don't.
just go, look, who's going to make it easy for me? If they're similar in pricing, I'll go with a product that's, you know, the same or slightly, maybe it's less well known in the mainstream, but you know, you've got some great non-bank lenders and great lenders that are offering just phenomenal process and service, or they're sort of maybe a bank, but they're not in the big four. That, you know, they might be in the top 10. So yeah, it's like there's really no right or wrong way. If the customer wants what they're going to want, but if you explain everything properly to them, you'll find that the ones that realize that time is money are going to pick the one that's going to give them the least hassle.
I agree. And it comes back to an earlier point where we're talking about when you first speak to them, or if it's you've been working with them for years, but you have another conversation. What are the goals now? What do they look like? And is it, I need to settle on something in 3 weeks because I've made an impulse buy. Okay, great. Well, then you're telling us what you need. So we are going to only look at a portion of the market because we need somebody who's going to give us an approval in days.
Yeah.
We can't go to somebody who's 7 to 10 days SLA.
Yeah,
It doesn't work.
It's going to cut it too fine because
Yeah.
it's always going to be hurdles and roadblocks and things that come up that are unexpected. So you certainly shouldn't ever be working towards the deadline. You should be working towards getting it all finalized well before the deadline.
Well before, because to your point, you don't want a stressful situation to turn more stressful. I'm very thankful in my personal life. Like fitness is a big part of my life, like endurance events. And for that, you have to have goals. You have to have strategies. You don't want to leave it to the last minute to go, have I done the right thing? Have I got everything together? Do I know what I'm eating if I'm running 100 Ks or something? No, I need to think about that earlier.
Yeah.
Your broker needs to think about which lender are we going to? Okay, well, that's important. But what were your goals for that? So then you can just give this awesome service regardless of time constraint, goals, doesn't matter. Client walks away really happy and you're a sticky client for a long time.
Tell me, when did you arrive at this, like, I need to start my own business? Like, what was the, like, everyone I speak to, there's always like a catalyst, a moment, like a light bulb moment or any other kind of moment where they're like, okay, now this is the right time. And sometimes it's not the right time. It's in fact, the opposite. But what was that moment for you? Talk me through it. What was the mindset? What was the...
It would have been last year, so 2023, probably the middle of 2023, that I started to realize I wanted to do in the future my own business. And that was for two reasons. One, our daughter Indiana was coming up for her 3rd birthday. And I realized that I want to make sure that I'm creating something for my family and I can give Indiana the life that I want to give her. Now, that's really important to me and my wife. The other one was when I finished up at the AML firm, I was frustratingly, but I see both sides. I was made redundant because the global economic situation changed. We were funded by venture capital. Money was no longer free as it had been in the 2021 years. And
it's never free, but it was flowing.
It was definitely flowing.
Yeah,
and it
VCs,
very easy to get.
Yeah, the VCs back then, were quite a bit easier.
Yeah,
but they never. There was always lots of strings that came with VC money.
Lots of strings.
Yeah,
but yeah, I saw the logic. They needed to extend their burn rate. They'd expanded to the UK. I was essentially a luxury that couldn't be afforded because I was running Australia, but with a head office in New Zealand. Take over the leadership from there, extend that run rate for the cash, and because the regulations for AML weren't here and still aren't quite here yet, we didn't have as large a target market. So I finished up, I did some consulting work, and honestly, most of 2023, I was trying to get back into the software industry. It's what I knew. I was looking at sales, customer success roles, leadership roles, and I tired of trying to convince people to give me a job I could do very, very comfortably. And partway through that process, I started looking at, before I got tired of it, I was looking at going, well, I see the value I can offer in the mortgage industry. My wife has been in the corporate mortgage industry for years, as we said. How can I do that without maybe going back into a huge corporate? So, okay, well, I would like to do something for myself, but not yet. It was a future plan. We're going end of 2025, early 26 was my thinking. But I knew I needed to get into the industry in order to then eventually create something for myself and for my family, and that I could do as I wanted to do it. And that led me to joining a loan market brand as a salaried broker. And the timeline just shortened between then and now, going, oh, I should do my own thing. I'm very passionate about how I want to go about doing it. I want something that feels hyper local and relevant to people. Obviously, service anyone in Australia, but I wanted something that people could just feel they felt comfortable with, that brand. So just take the plunge. But it's not been something I've thought about for the last 10 or 15 years. It's been when significant life changes have happened, leaning into those and going, what's important? How can I make this a success for the next 15, 20 years? That's a good way to do it.
Yeah, that's great. And, we always, everyone I speak to, there's always a significant life event that just leads them to like, nah, enough is enough. I need to do this for myself. And oftentimes it's when their back is against the wall. So, a lot of people I spoke to started businesses when they either lost their job or their job became uncertain around COVID. And they were just like, okay, let's start, my story is pretty similar to that. I didn't lose my job, but the business that I was a minor shareholder in was going to be hibernated because of COVID. And I just said, well, remove me from my non-compete. I'll hand back my shares and we'll go our separate ways. And then I started this business. So there's so many stories like that, birth of my first kid, or like they're just backs against the wall, forced to make a decision, forced to like really, put the foot to the floor and like want to change things for their family, want to take themselves out of this sort of, making ends meet cycle, and really build something that gives them some level of financial freedom. And I'm not talking about, that being the major motivator in terms of people wanting to, make millions of dollars. It's more like, I want to be in a position where I can support my family and give them the life I want. So when you say that to me, it's like, yeah, beautiful. There's always like a good story like that, that led people to make those calls. And I think this is an industry where, if you've got the right attitude and the right skills, you can really be successful. Your ability to sell technology or implement technology in those customer success roles, is going to help you here, because ultimately what you're doing is customer success, but for homes, and so, if things go bad along the way, whether it's a conveyancer drops the ball, or, real estate agent, unresponsive, or, for in some cases dodgy or, unethical, it's like, you got to be there to make sure that you're ironing out the kinks before those problems become real problems for the client to deal with. And that's what I love about it. It's like you're almost the mediator trying to, connect everyone. In our case, it's like the equipment or car vendor, like the dealership, and then you've got the lender, and then you've got the client, and then sometimes you've got the referral partner as well in there. So, keeping all the parties happy, it's just such a dynamic space. And look, there's times where we don't get it right. That's business, that's life. You can't keep everybody happy, but we do our best to make sure that, we're ticking every box and we're following our process, which gives us, good feedback out in the market. But look, before we wrap up, we've got a bit of a tradition here, and I know this is all still new for you, but I'd love for you in 60 seconds to give us your pitch. why would they use you? So if you don't mind, when I go 3, 2, 1, I just want you to jump into it. Tell us about. Whenever you're ready, 3, 2, 1, go for it.
And so, Allies of Finance, the purpose of the mortgage brokering that we've started is to provide that high quality customer service. It's to go above and beyond, but it's also to make people feel that they're working with a firm, an individual that they truly understand, that they can relate to. Like, we've purposely designed a brand that feels local, that feels part of the community. Community is incredibly important to me, to my family, to the team that I will hopefully work with in the future. And it's that piece, but then it's the industry knowledge, the service that we've talked about today, that high quality service. It's understanding, truly understanding people's goals, their wants, their desires, so then you can turn those plans into property or asset in your case, and working with them for the long haul. So this isn't a thanks, see you later. This is, let's understand you, let's build a relationship with you, and let's go on that financial journey together. That's what's really important.
That's beautiful, mate. Really appreciate you taking the time to come and do this. It's
thank you for the opportunity.
No, yeah, it's great. It's kind of obviously we work with so many different mortgage brokers, but they're all work at different stages. Some have been going for 5 years, some have been broking for someone else for a really long time and then starting their own. Some are just getting started out. So it's really good. We've tried to sort of get a broad spectrum, and then people can learn about how you plan to do things and take something from what you're doing, and then obviously you'll learn from others. It's like it's a really good network, and we sort of try and support the industry as much as we possibly can. So absolute pleasure. Thank you for coming.
No, thank you for having me. A lot of fun.
Thanks so much, mate. Appreciate it.